for Nasdaq futures June contract, and the market is open right now. We are going to have a view of the market. So far we were in a bullish market since this morning and during the night, and right now the market opened. Let's see what we have here. We start our analysis from 15-minute chart. We go back to 15-minute chart to see what we have. Here I highlighted a buy side liquidity for the price to go and reach. Since the price started its move going over, we are looking at this buy side liquidity at 18,361 and a half. Right now we are almost in the middle of the gap. We touched it and we are rejecting. Now my interest for today is the sell side liquidity here, because in my opinion these are quite very smooth and interesting, as then it's coupled with the new day opening gap of today. Yesterday we had a very wild market going up and down, and it moved around 1600 handles, which is quite a lot for one day volatility in the Nasdaq futures. Now again we go back to the 1-minute chart, and in the 1-minute chart we can see here we have the price for settlement of yesterday, and we are doing this over here for opening the market at this price. It's 18,150 and a half. This is our open range gap. Let me write this. This is open range gap I, and we have it here, the other half. Let's put this in the center. Okay. Now here we have our opening range gap. We are looking for price going lower. However, there's a buy side liquidity from yesterday's high over here, and we are interested to see what market is doing. So far the market, after 8:30 opening around here, the market was rolling up and forgot to take the sell side liquidity that is created in the Asian session. Okay, now we are going above the first fair value gap represented on Friday, April 4th. Now we are waiting for the market to see if it can create the first presented fair value gap. So far all the bodies of the candles are respecting the fair value gap from Friday. All right. It's 9:34 and still there is no fair value gap forming after 9:30 opening. We are still waiting, and we don't rush into the market to get some more insight and idea about the market trading. This candle also closed below the consequent encouragement of the first presented fair value gap in morning session. Okay, we are starting discovering a lower prices, discovering a lower if we have the ability to go lower. Remember that in the first 30 minutes of the opening range, we have the ability and chance to visit the consequent encouragement of the new opening range gap. So far, we got back to the opening range. Now we are going lower. Consider this fair value gap here. I'm expecting this to be acted as a inversion fair value gap and sending the price to visit lower prices and ideally the consequent encroachment of the opening range gap. We have also to consider the sell side liquidity over here. These are relative equal lows. So far, no fair value gap over here. The trade idea for today, for me, I would like to see a bearish market as we have explored higher prices all the night and in the London session. I am very interested to see this price run here as a breaker coupled with this fair value gap as inversion, and it may give us the right idea to send the price lower. If it's possible, I'm very interested to enter here for for going short. Okay, right now we have the first presented fair value gap considering the volume imbalances over here, and let's see. Yes, now the price touched the consequent encouragement of the first presented fair value gap. Let me draw this a little different color. So we have this. I would like to start going lower. So I'm making a position over here to see if I can get filled. The stop loss and take profit for me is 40 and 800. This one here and 400 as my risk. The reasons that I entered for a short position over here is this breaker block over here coupled with another breaker block here and the first presented fair value gap, which is CB. So we are using all of these in order to go and visit lower prices. The ideal price that is created and gravitated to me is the equal lows over here, but my plan for today is 40 handle run as a profit and 20 handle as my stop loss. So far we are in profit, and let's see what happens and what does the market do for our position. We are not stressed, we are not excited, we are just doing what the strategy and model is saying, close to the take profit, but still nothing happened. And the market is getting a little crazy at this time. So stopped out for the first position, not a problem. We are still waiting for the market to see if it gives us any opportunity. The candles are still closing below the first presented fair value gap, and maybe I would like to set another position in the same place. I am setting another position for 810, considering the prices for commissions. Now just need to be relaxed and wait for the market to see what happens. Okay, the second position opened and we are in. Let's see if the market is sending me us again out of the position. Not a problem, because this is a demo account and we are just here to have some fun with some TradePie daddy. Now we are waiting for the market to see how it's behaving with this first presented fair value gap. Maybe it gives us the chance to get in the long position as it closes above it and goes above the ORG high, and then come back to retest the first presented fair value gap and then going higher. Let's see. We are in the opening range between 9:30 to 10 Eastern time. Trying to touch the opening price at 18,150 and a half. Let's see if the market can close above this or GR high. Now we are touching the consequent encouragement of the week in 15-minute candle from yesterday. Okay, this candle closed inside the opening range gap. Touching the first presented fair value gap of the day. I'm still interested to see lower prices, and the first objective is the consequent encouragement of the opening range gap, as this sell side liquidity over here. But the market is now generating and I'm not rushing to get in any position. We have to consider that tomorrow and the other days of this week, we have FOMC, we have CPI and PPI, which are the most crucial news and data is coming out on this week. Okay, we have it trying to reach the short-term high created after not opening bell. It's a good idea to measure this and let's have the quadrants on it. Okay, now we close out of the open range gap high. It is very favorable for me after touching the high of and creating the new high. The price comes back and touch the first presented fair value gap on April 4. I mean this fair value gap, and then use this as a ladder and springboard to go higher to reach the buy side liquidity over here. Okay, price is trying to reach the first presented fair value gap of Friday. Okay, now we have this part over here, this small BC, I'm sorry. Let's see if the price can go above this and close above this first presented fair value gap that is formed on Friday. I'm very interested to see if this candle here, this piercing to this fair value gap is considered as a institutional entry drill order flow or no. Let's watch the price and see. Once again, we are jumping into the BC formed inside the CB of the first presented fair value gap on Friday, and now touching the open range gap high. We are trying to reach the first presented fair value gap of today. And yes, here we touched it. We are going lower and inside this small BC. Okay, I'm trying to put the order here for going buy. 820. third position also is a loss. Okay, we see the market has traded into the first presented fair value gap of today, and after that soared up and cleared the buy side liquidity another time. So to me, it's quite obvious we are trying to reach to this buy side liquidity. Right now we are in the macro time window, and let's see if we can have a retracement to the opening range high, opening range gap high, and from here we trade above and going higher. We see that the market has overlapping a lot in here and it's quite choppy. It doesn't have any direction so far. Whatever it went up, it came back and took it back. Again went up, and now let's see what's doing here over here. So we are not rushing into trade, and we are here just to practice and read the price action. The price has a good reaction after touching the high of this candle and going higher. This can be our breaker, the high of this candle. These three white candles can be considered as our breaker. 5 minutes to the end of the opening range that is between 9:30 and 10 in Eastern time. Let's put a border for this candle here so we can see it. Once again, touching the breaker, the bullish breaker, and just a little bit above the first presented fair value gap of last Friday. Remember guys, always stay hydrated. This is a kind of price action that you can see the days before high impact news like FOMC, CPI, and PPI. So we are not rushing into any trade and we are just sitting here to read the price action. Once again, touching the CB from April 4th. Let's see if this has a potential to send the price up and go higher to reach this buy side liquidity that is from 15-minute chart and high of the yesterday. Let's go back and watch that, where it comes from. You can see on the 15-minute chart, this is the buy side liquidity I'm interested, and this 50% level is the consequent encouragement of this week. So here. The interesting point for me of today is the sell side, because there are quite relative equal highs here. We have 3, 4 relative equal lows. So what's happening for me? I'm expecting to see this first 30 minutes as a Judas swing, and after that we have a turn in the market and we are exploring lower prices. So we see that after touching this fair value gap for the last time, the market started moving higher. Yes. I'm just interested to see if we have the ability to get any level around. Yes, we can see this level over here, 100% of this first range of the day. So it's very likely to see this level over here is touched. We are putting a buy order here. And we are targeting this buy side over here. Oh, the market was a little delayed. This entry is based on this FVG formed here, and we are interested in seeing higher prices over here. Let's see if we can reach to 320 level or 300 before that. I would like to put an order on 300 for taking a partial. Once again touching the fair value gap, and let's see. I'm expecting to see a run in this candle or the very next candle into north, and preferably touching my partial over there at 13,300 and a half. Yes, guys, we touched 40 handles wrong, and now we are going higher. After getting off one contract, I will trail up my stop loss to end of the to low of the candle in order to just save our position. We are close to the 300 level. 98, 97. Let's see the high. It's only for 2 ticks, guys. We couldn't get filled, and let's see now. The high at this candle is again 300. Our position is 300.50. And here now, because of this spread, I think we didn't get filled. These things happen, guys. Don't worry. Stay positive and always trade well. Let's see if in this candle we can get filled and exploring higher prices. Okay, a profit, and the stop loss is placing below the low, below the open price at here. So right now we are just waiting and seeing if the market is trying to reach the buy side liquidity I mentioned above. next level that is interesting to me is 330. Let's see if the market can reach here. Pulling back to 300 level, 290. This is completely normal. Don't panic, guys. Here we have a volume imbalance that is the price is trying to reach, and let's see the reaction of the price to this volume imbalance over here. Okay, the price closed below that, and let's see now what happens with this block over here, this red candle. If it can save the price and send the price higher, or no, it's not respected and the market goes down. In this case, even we are not losing anything because we already took partial, and partial always pays you. All right, very close to the stop. Let's see. Okay, guys, we got stopped out, and once again touching this fair value gap over here, and the market is trying to going higher from that. Let's see today's action. 1247 and another 172. Not bad for today, and these are for yesterday. Let's look at this one over here. Let's look at this one over here. Yes, guys. This was just another touching to the fair value gap and trying to send the price higher, as I was expecting. It's not a loss for us, don't worry. Just remember, never try to catch the price when it's moving higher and higher. You have to see when and enter into the position when it's showing their sign. Right now until 10:20, I'm expecting the price to go lower and then has a comeback to touch this candle's wick, has a potential run going lower because we are trying to reach the sell side liquidity and 50% of the open range gap. over there. Now it's 10:11 and I'm expecting this type of setup forming between 10:20 to 10:40. Let's have a look at US. So far they are moving together. Uh, it's very good. Once again touching the fair value gap, and let's see the reaction of the market to this. Have you ever felt that it's going to be running without you? This is one of the biggest fear I always have, and they call it FOMO. I really don't know how to cope myself with this and stop myself from feeling FOMO, but most of the times and most of the losing trades I have is due to this FOMO that I have. And I know it's quite very dangerous, but I really don't know what I can do about that. And if you have any idea how I can get rid of FOMO, please let me know. The market is ranging as it's expected. We are after macro time window and we have to see this type of moves before seeing the next move in approximately 6 minutes. I'm expecting, as I told you, to see the market goes below the relative equal lows over here and then trading back into this fair value gap and acted as an inversion and this as a breaker and sending price to go lower. But let's see for now. We got back to the 300 level. Now let's see if the market has the potential and power to go higher and reach the 361 and a half. That is the high of yesterday. And we have a of liquidity over there. Once again, the price is going back to below 300 level. 310. Almost 320, yes. 330 touched. Now we are waiting to see if the price has the power and energy enough to go for the buy side liquidity. Yes, now the market is a little short of touching the buy side liquidity from yesterday's high. Getting back to the range. It's 10:18 New York local time. We are not excited and we are not losing something. We are just here to read the price action, and so far we are watching the price that has a very nice behavior and reaction from this fair value gap. I'm sorry, I didn't sleep quite well last night. However, we are just here to watch the market and read the tape. We already had our trade, which was 2 loss and 1 win of the day. Getting back to the 320 level. Yes, again 300 level. Let's see. Now we are at 1020, and let's see if the trade idea I was planning is getting into the gameplay. still in the consolidation. The price is ranging a lot in this area, even though it's a little bullish, but it's not a clean market at all to trade. We just need to stay here and read the price. There is no rush, there is no need, and there is no emergency to trade. Remember, not losing is a win. Now we have this run going higher. Let's see if it is potential enough to clear the buy side liquidity. And in my opinion, after clearing and purging the buy side liquidity, we need to get back into the range and discovering lower prices. Now still a little short of touching the buy side liquidity. Trying going lower to the 320 level. Three ten channel, and we are back again to the range. This is the signature of the price that before the days like FOMC, CPI, and PPI. As you have to check the calendar on Forest Factory website, we have these three reports coming out later in this week, and the ending part of the week we have these three important red news and data released. The market is really stagnant and choppy. This is not a clear market to trade in. So far, we had the best opportunity to trade from this fair value gap forming over here after testing it three times here and having a run, then coming back all the way back to touch it again, and another run, another going back and touch it again, another run, and each time you see a little bit of the buy side of the previous candles are purged and then get back to the range. And it happened also over here. So this is the signature of the price that you should never try and trade in it. If you want to trade, you can trade in your demo just as a play, but not with the real money. Now we are 1024 and the price is discovering below 300 level. I'm expecting to see a run below here because it's almost failed to touch the buy side liquidity, but this buy side liquidity is still in run and it can happen to come over here to this fair value gap and from this one has a bigger run to touch the buy side liquidity, but this is not something so far to impress me and make me trade. What do you think of the price action today? Is it good? Is it bad? Is it scary? Do you feel like, oh, I missed the move. Oh, I have to get in the trade. I have to follow the price. Or no, it was very boring and it was not moving in your favor. You have to write down all of the feelings you have in your brain right now. And you see the price is not moving a lot, getting back to 300 channel. Just a little bit above 320 and getting back down. This is a lot of back and forth in the price action. In the high resistance liquidity run, this is the signature. It goes a little high and comes back all the way back. It goes a little high and comes back and take it all back. And you can see the candles are overlapping each other very much. You can see the wicks are pretty big and the candles are not running that big. It's just consolidating in a upper run, but there's nothing here to see as a clear position or model. Very close to touch the buy side liquidity. Let's see if this is also another failure to touch the buy side liquidity or no. Yes, apparently that was another failure in touching the buy side liquidity. We are getting close to 10:30 New York time. Do you guys like to listen to music? I can play a little music for you guys. I produced this song myself around 5 years ago. The name of this song, that is only instrument, there is no singing, is Evolve. Okay, now the price got back again to the range and failed from going higher. I told you this is the signature of the high resistance liquidity run, and it's going up and down with very large and huge wicks without any beautiful direction. Now let's see if we are going below the relative equal lows that is created before 10:15. Yes, this is possible to go and touch the fair value gap once again. Let's see it guys together. Yeah, apparently this is a better run or going lower. I'm expecting to see this candle over here acts as a breaker coped with this fair value gap over here if it remains open. We have 30 seconds for closing this candle bar. Is there any volume imbalance here? 268 and 267.5. Yes. We have a small volume imbalance between these two candles that we have to consider. Let's see if this fair value gap is acting as sending price lower, but you have to allow the price to reach to this candle, this red candle over here, because this is our breaker. Well, the candle couldn't touch the close price of the breaker. Okay, right now it touched the breaker. Let's see if it has the power to go below. It's not very favorable to see there is any trade above this red candle's high. Getting back to the fair value gap. Okay, we have two candles closed above this fair value gap, and this can act right now as a inversion fair value gap. Let's see if the market has the ability to trade back into this inversion fair value gap and then once again trying reaching higher. Trading above the breaker block, and now getting back to the breaker block range. guys, I think I will be with you for the next 4 minutes. And after that, if the market didn't touch the buy side liquidity, I have to stay content and be happy because this is not the market that gives me any good opportunity for trading. And remember, tomorrow we have FOMC, the day after we have CPI, and on Friday we have PPI numbers coming out. This is very difficult market situation for this week, so stay safe and do not overtrade, do not push your edges, stay safe. Go out, try to walk or enjoy your life. Do anything out of the charts. If you want to stay on in front of the monitor, I suggest you to just tape reel, or the maximum you can do is demo trading. It is not advisable at all to trade with mini contracts, and if you are very risky on your responsibility, you can trade with micro contracts. This is my suggestion. Anyhow, let's see if these 2 more minutes the market can reach to the buy side liquidity, which is quite not favorable, and because the market is very choppy this day and it's not moving at all. It's just in a range, going up and down, covering all the prices several times. Once again, we got back to the fair value gap that was formed at 10:30, and after testing it, getting higher. That was quite bothering me. I think this time we have the chance to visit the buy side liquidity. Let's see. Let's check out the market at 5 minute chart. Ah, this is very bad chart for 5 minutes. You can see all the candles are covering the price several times. This is not good at all. In 15 minutes. In 15 minutes, we are still bullish after leaving this CD over here. Let's get back to 1 minute chart. Okay, guys, I think for today we are done, and that's it for today. Be careful and watch out for the market. Do not overtrade or push your edges. It's not time to make yourself a hero, because in this case you are making yourself a hero. Remember to buy your pie and stay away from the chart. Have a good day and happy trading, good trading. be safe. Cheers and goodbye.